Hi, everybody. It's Connie and Stacey at SALTovation. We're here today to talk to you about use tax. This is a type of tax that may not be top of mind for taxpayers out there, but definitely one that can maybe be a surprise. Unfortunately, under audit is where we tend to see that come in as a surprise or inquiries from the states. But wanted to give everybody a little bit of information, some tips and tricks on use tax so that you were also not surprised down the road. So with that, I'm going to just ask Connie some questions here because she's kind of our resident expert when it comes to use tax, whether she likes it or not. So I guess let's start with what's the difference between sales tax and use tax? I think that a lot of taxpayers are very familiar with sales tax, but maybe they're not so familiar with what is a use tax.
Yeah, absolutely. Use tax is the same concept as sales tax typically. It's basically where something that you've purchased is taxable, has not been assessed a tax by the vendor for whatever reason. Maybe the vendor didn't have a responsibility to collect the tax because they don't have nexus with your state. Maybe they didn't know that the item you're purchasing is taxable in your state, what have you. So a lot of times the vendor will not charge tax. So if they did not charge tax on an item that is actually taxable in your jurisdiction, then you need to accrue and self-remit the use tax to the jurisdiction.
Right. That is true whether you're a business or an individual.
Absolutely. In fact, some states have started adding a use tax line to their income tax returns for individuals. So you can have no reason not to report it. There's nowhere to run from use tax.
Right, exactly. So what are some things from a reporting standpoint that taxpayers should know? Because again, I think a lot of taxpayers are familiar with sales tax and maybe they're going out, they're getting registered for, because of Wayfair or whatever, right? But what do they need to know about use tax from a reporting standpoint?
Yeah, so use tax is just a little bit different from sales tax in that usually the responsibility is more on you as the purchaser to take care of the tax, to remit the tax, and to account for the tax yourself. So a lot of times an invoice will come in, I'm talking from a business point of view, an invoice will come in to accounts payable group. They're trying to process as many invoices as they can during the day and just trying to get them out and get them paid. And so they're not paying attention to the various tax lines. So a lot of times the vendor may charge their own tax rate, not charging the tax rate for the jurisdiction where the item is being shipped to or used. And so a lot of times you may be paying tax there, but then you would also owe tax on another location. So just kind of trying to put a process maybe around the AP function as far as at least looking at use tax, flagging certain accounts that would have more taxable purchases. So maybe like your furniture and fixtures, you might want to look at that. You might want to look at, in some places, software. There are various accounts that would more typically have a use tax associated with them than not. And then just having a process set up around the whole use tax remittance and calculations. Typically, it's a monthly reporting, and it's just a matter of going through and looking at each invoice, looking at what was paid, looking at what should have been paid, and kind of making that up. It's really no automated way to do use tax, unfortunately. There are systems out there, but it's just there are no perfect systems. So right. Unfortunately, it's a little bit manual. Yeah.
That's what I was going to say. It seems like it's a lot more manual process. Mm-hmm. I've gotten this question before. What about if a taxpayer says to you, what if we order equipment? It could be laptops, it could be equipment used in their business, and we get it shipped to or delivered to a non-tax state like a Montana, a Delaware, and then we ship it out to like a Texas or a Colorado. Do I owe tax on that?
Absolutely. Of course. I think we all try to find ways to try to keep the tax down. But when you ship it to Montana, that's great. But you need to look at where the equipment's actually being used. So if it's being used in a state where there is a tax on that equipment, then you would need to accrue and remit that tax. Right. Unfortunately.
Right. Yeah. Because I think that there are some taxpayers that think that might be a planning mechanism where it's okay, I'll take delivery of it in, a non-tax state, and then I'll ship it out to our operations or whatever in tax states. But I think that they might not understand that once it gets to that tax state, like a Texas, a Colorado, or, some of these other states, they're going to owe use tax on it. Tax was not paid on it in Montana or Delaware, the states that don't impose it.
Yeah, I think another twist on that whole scenario is if you would consider that some states where if you have the taxable equipment shipped to the state and then you ship it out to another state, some states don't have a temporary storage exemption. So you may owe use tax on that equipment while it's there in the state before you ship it out to the other state, where you may also owe use tax. So just something to keep in mind on, you don't want to pay more tax than you should.
Right. And then what's kind of the rule of thumb? Because let's say that you pay tax on it in the first state where it's shipped to, but then you ship it to a different state. Are you paying on the rate differential typically, or kind of what are those rules?
A lot of states will allow a credit for taxes paid if they were legally imposed by the other jurisdiction, so long as they were legally imposed by the other jurisdiction's key term there. So a lot of states will allow credits for taxes paid already. So you'll just reduce your tax by the amount that was legally paid to the other state.
But it can be kind of an administrative nightmare, right?
Absolutely.
For taxpayers, because if you think about it, I mean, particularly with like remote workforce and things like that, right? What if you're shipping laptops or whatever into like a central location and then, shipping them out? Technically speaking, there's a potential use tax issue there in the states that they're shipped to.
Yeah. And thinking about even issues, and that's a state-by-state basis that you kind of have to evaluate that. But, a typical thing for a company to do would be to order all the laptops, have them sent to the IT group, wherever they're located, have them all configured for the employees, and then ship them out to the employees wherever they may be, which, after COVID, who knows where they are? They could be all over the place. And so that could be a nightmare.
Yeah. And then I guess from a remediation standpoint, let's say that, we've got taxpayers that are listening to this going, I haven't done anything with this. So what are their options?
It depends on the amount of tax and the amount of time that you've been in this jurisdiction. And so I would suggest kind of taking a look first at your liability. What do you think we owe to this jurisdiction? How far back do we go? How long have we been in this jurisdiction? And then based on that, there are various options. We can either register prospectively and go forward and take the risk that an audit could go all the way back to before, whenever you started there. We could go into a VDA, a voluntary disclosure agreement with that jurisdiction saying, okay, we haven't been involved here, but we haven't been reporting, but we want to report now and get compliant. And typically for a voluntary disclosure, you're looking at about 36 months worth of use tax. So just evaluating that amount, going through the various accounts that might be with taxable purchases, and coming up with that amount. Penalties are typically waived. Interest is sometimes reduced. And you can just go forward with compliance from there. So those are kind of the spectrum of the compliance efforts.
And then licensing, right? So sometimes taxpayers, depending upon the jurisdiction, they might need to get a couple different licenses, right? If they have use tax and sales tax, right? Because some of the jurisdictions will classify those as different and make taxpayers get separate licenses. Isn't that right?
Absolutely. So sometimes, especially with voluntary disclosures, when we're trying to enter an agreement there, that's where we want to pay attention to what the state requires. Some states are totally fine with, you're registered for sales tax and income tax, but you're not registered for use tax. So let's get you compliant and we'll help you in that respect. Other states say, you're registered and you should have known about your responsibility to pay use tax. And so we are not going to enter into voluntary disclosure. You're stuck and we're going to maybe go back and audit you. I think that the audit period it's typically the worst case scenario is about 10 years.
Ooh, that
is what I've seen.
That's a bad case. Yeah.
And that's a bad case because you have to go back and find all of your receipts and invoices and that sort of thing. And most companies don't keep receipts that long. They don't keep records that long.
Right. And then reporting, right? There's states out there where the use tax is not on the sales tax return.
Correct. Yeah. So that's always fun. I'm trying to figure out exactly what reporting form to report where. That's the complexity of state and local tax, I think, is just trying to figure out who gets what, when, and how to send it to them and how to get it to them and how to report. Yeah. So some states actually have, and jurisdictions, speaking about home rule cities in Colorado, some jurisdictions have their own separate use tax return that you would fill out separately, complete separately. Typically, however, I would say the one good thing is that they're typically due on the 20th of the month, just like your sales tax return.
Okay. All right. All good nuggets. Thanks, Connie. And if anybody out there has additional questions or wants more information on use tax or any other SALT topics, reach out to us at saltovation.com. Thanks and have a great day.